Welcome to another video. My name is Nick and I'm a top podder on TradingView with over 260k reputation points. And here in the Transparent FX Academy, every day I share new free education and analysis. So make sure that you subscribe and I will see you on the charts. Okay, so it's definitely time to speak about BTC USD. I got a lot of requests to make this breakdown. So what I will be doing is giving you a complete multi-time frame analysis of the current structure and price action of Bitcoin. We will also look at the previous cycles to see how, from a fractal perspective, this cycle is lining up perfectly with what we had in 2013. And I will be giving you my take on the potential future price action here for Bitcoin. Now, let's start first by analyzing what we have from a technical perspective on it. Now, here in the monthly time frame, we can see a strong impulse to the upside followed by this correction. This is the most famous and most frequent pattern in the market. You have an impulse, a correction, then the market provides the continuation to the upside, because after the correction, the market has basically built up new buying pressure, and after that the market creates the continuation to the upside. Now, by looking at the on-chain metrics, what we can see is that most of the long-term holders have acquired Bitcoin during this correction. So we have over 90% of the circulating, well, not circulating anymore, supply of Bitcoin, which is held at the moment by long-term holders, which could easily bring to a supply shock that would make Bitcoin create the continuation to the upside. Now, as I was saying, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. Now, if we do that, we can see how the market here has just retraced exactly to the 0.618 of the Fibonacci taken on the monthly impulse, which is a quite strong support and demand area from which, in general, strictly from a pattern perspective, you do expect a rejection to the upside and for the market to create more continuation. Going down on the weekly time frame, what do we have? Here in the weekly, we can see how at the moment we just went down and tested the previous weekly resistance, which is now turned support. And we already started rejecting this area to the upside. We can also see that in creating this correction, we just had a complex correction given by this A, B, and C a complex correction to the downside, testing this previous resistance turn support, from which, once again, we can expect the market to provide a rejection to the upside. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. We go down on the daily time frame and we can see that in creating this meltdown, the market has also created this M pattern. Now, in general, after the creation of an M pattern, you do expect the market to create a move to the upside, at least to the neckline, which is this previous support, now turn resistance. But overall, if the neckline breaks, you can easily expect even more continuation to the upside. So once again, Bitcoin also from a daily perspective seems extremely bullish. Now, if we compare the current price action that we have here, what we can see is that we had basically a bullish August and a bullish July, a bullish August, and currently in September we're getting a little bit bearish, okay, after a very strong impulse and correction following the Bitcoin halving event that we had around this area. Now, this is exactly what was happening in 2013. In fact, if we go back, what we can see is that we did have in 2013 the massive move to the upside. We then had the move back down. Then what happened is that July and August were bullish. We had a slightly bearish September, and then October and November were just explosions to the upside. And once again, this is exactly after the halving event, moved back down, moved back up, and then we had the usual basically crypto winter. Before then we get the next halving event and the continuation to the upside. Now, if you don't know what I'm speaking about, halving, etc., I really suggest that you look that up. It's how usually the 4-hour cycles have been playing out for Bitcoin, following the reward which is given to miners. It's beyond the scope of this video, so you can go and check that out. But well, if you want me to make a video specifically about that, you can let me know in the comments below, but it's full of resources that explain that already. Now, since the pattern that we're seeing here is the exact same one, we can expect a supply shock to happen, considering that, as I said earlier, if we look at the on-chain metrics, 90% plus more than 90% of a Bitcoin at the moment is held by long-term holders. So I really believe that October and November will be very bullish, in my opinion, for Bitcoin. We will see how this will play out, but I'm very bullish for the end of the year. And then, yes, I do expect a correction. I expect something very, very bullish. Everybody will start FOMOing in the market. Then they will get wrecked when the market melts back down. We're supposed to see a test of this area. And then we should remain inside of the range, which is in between the all-time high and this previous resistance turn support, until we get we then get the next halving event, which will be in 2024, after which I expect potential continuation to the upside. This is what I believe should happen on Bitcoin if we continue to follow our usual 4 years cycles, and if everything will continue to play out also from a macro perspective. So this is currently what I believe we have. Now, when it comes to a trading perspective, we can see how here from a daily perspective, we do have this M pattern. So when it comes to the short term, I definitely expect a correction to complete this previous support and resistance. So in general, with students, the way in which we will be approaching this potential short-term opportunity and completion at the neckline, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So inside of here, we will be monitoring price action from an intraday perspective, so 4-hour and lower, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding BTC USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point to see the market at least complete the M pattern at this previous support turned resistance. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.